Hey guys, Chuck Barone here. Friday, July the 8th, 2022. Casual Friday, yay! The end of a crazy week in the markets, a crazy week in the world. All kinds of stuff to talk about today, guys. Wrapping these markets up for the week. I think the markets kind of finished with a little bit of a whimper, letting everybody know that they have no friggin' idea what's coming next. The stock market today was basically flat. I think, again, the market has some serious uncertainties about which way it's going. You're getting all kind of mixed signals with unemployment going crazy, with employment going crazy, and you still got interest rates and the risk of a recession, so it's really mixed signals in the market. The bond market today basically flat. The 10-year closing at 3.10, up a whole basis point. So St. Jerome keeps working these miracles in the bond market. We'll see how long this can last in the face of reality. The bond yield is still inverted with the 2-year higher than the 10-year, so it's kind of signaling recession. Yay, recession, more recession. The dollar leading the way. It's the big kid on the block right now. It's closed today at just under 107. It's probably the strongest currency in the world right now, at least as far as the dollar index goes. Actually moving in on parity with the euro. So pretty soon you're going to actually be able to change a euro for a dollar without paying any big for it. The metals market are holding their own in the face of this strong dollar. I think that the metals market is probably the market that's most susceptible to the strength or weakness of the dollar. So the fact that metals are hanging in there at these levels in the face of this dollar is not a bad sign for the market, even though prices have been under a lot of pressure. I think that when the dollar starts to come back down to earth, which it will, that metals will have a nice rally coming up. Basically, end of the day flat today, up marginally, both gold and silver. Oil had a good day. Oil was up over 2% today, with West Texas Intermediate closing at just under $105 a barrel. It looks like the oil market is starting to understand that in spite of these prices, demand is not going to drop as much as they thought. We got a little bit of a rally going in oil. We'll see how long that can last. Natural gas today was down, actually down a little more than 3%, but I think that really is nothing more than profit taking because it had a giant, massive surge yesterday, over 13% to the upside. Bitcoin had another great day today, closing right around just under 22,000. I'm going to take a good look at that chart this week, because just at first glance, it looks like there's not a lot of resistance from the level it is now up to about 28,000. So I want to get a little bit better look at that, because if it really breaks out, I think it could have a pretty nice run coming up. In the world and markets, well, everybody's heard about the assassination in Japan. Tragic circumstances there. Hopefully that won't do damage to our alliance or create any more weird tensions in that region. We certainly don't need that. On the economic inflation stuff, some really interesting stuff I want to share with you guys today. The St. Louis Fed governor and his deputy were being interviewed, and they kind of, every once in a while, these politician, political bureaucrats, whatevers, they make a big mistake and they kind of tell the truth. And I think that's what happened with these guys. So what they were saying is they strongly back a 3/4 point increase coming up here this month in July. They strongly back a 0.5 point increase again in September. And then after those two are done, they feel like then they can debate with the rest of the Board of Governors whether to go down to 1/4 point increases or keep the rate increases elevated till they hit their targets. The translation of all of that, well, the Fed believes that inflation is becoming entrenched. They believe that the public is starting to believe that inflation is going to be here for a little bit of time now. People aren't going to believe it's going away right away. And when inflation becomes entrenched, it becomes like a self-fulfilling prophecy, and that really scares the crap out of the Fed. They believe that inflation is going to get worse. That's why they're talking about rate increases all the way through next year. And they see, obviously, inflation staying high because they're talking about rate increases all the way through 2023. Here's my favorite part, though. They both see a soft landing for the economy. This comedy gold, guys. Remember we talked about this in yesterday's video? When you hear a bureaucrat or somebody from the government say the word soft landing, picture the Hindenburg exploding into flames, because when they say soft landing, the typical result looks something like the Hindenburg did. The Fed believes right now that 2.5% on the overnight rate is a neutral rate, which will neither cause the economy to expand or contract. Comedy gold here, guys. Today the Fed funds rate is 1.6%. The market can't even handle that. You saw what happened when they raised it to this number. The bond market went crazy till the government and the Fed intervened. It led to a giant sell-off in the stock market. We all watched that like with eyes wide open. Now they want to try and they insult our intelligence every day with this nonsense. It's just crazy. But now imagine this. Imagine if they actually follow through and raise that overnight rate by 1.25 by September. Okay, so now you're looking at a Fed funds rate of about 285. The 10-year note probably 5 to 5.5-ish. Who believes that's possible? Who believes that can happen? Who believes that that won't trigger a massive sell-off in the stock market and a giant contraction in the economy? So this is some stuff we have to look forward to. I've been saying it and I'll say it again, guys. The Federal Reserve is in a giant pickle here. They're stuck because they have a Hobson's choice. If they do the things they need to do to bring inflation down to their target number of 2%, they have to destroy the economy to do it. If they want to support the economy, which is already in recession and going to get worse, now that makes inflation just go even crazier than it already is. So, which way do you think the Fed's going to go? Do you think they're going to support the economy, which is they're going to have lots of political pressure to do that, or you think they're going to support their mandate to keep a stable dollar and bring this inflation number down? Whichever way you believe, you can kind of place your bets, because if they fight inflation, you can bet there'll be a correction down to the downside in the stock market. If they support the economy and let inflation run, you can bet there'll be a rally in the stock market. So however you see it going, place your bets, and move your portfolio into position accordingly. Here's some interesting stuff. Today we had the employment numbers come out, and the economy had a great month for employment, adding 372,000 jobs, as opposed to the 250,000 that they were expecting, and there was their prediction for the month. This is telling us that the labor market is still super hot, and I got to say, that's one of the things the Federal Reserve hates most. See, when you're in an inflationary environment like we are now, one of the things that makes this inflation stay longer and get worse is what they call this wage price spiral. Now, what that means, translation for everybody out there, prices go up, inflation sets in. So the working people demand better wages to compensate for those price increases. The employer wants to keep his employees, so he gives them those raises, but at the same time raises his prices to compensate for those raises. So what you have is prices go up, wages go up. Prices go up again, wages follow. And now you got this spiral where it just gets out of control very quickly, and once it gets started, it's extremely difficult to stop it. So leading up to this beautiful part that I wanted to bring to you, the most important part of what I got to say today. Larry Summers, most of you guys know who he is. He's a former Treasury Secretary under Bill Clinton. He's also the guy who correctly predicted this inflation would happen back when President Biden Carter was suggesting that we go ahead and put another $2 trillion into the economy. He nailed that one and was way ahead of the curve. Well, he just gave a speech over this past week at the London School of Economics, and he had some stuff to say that had basically everybody sitting in that audience crapping in their pants. Basically his comments, I got some notes here. He said that a red-hot labor market needed to cool before we could bring inflation numbers down. He said that how much, he actually answered his own question. He said, how much would it need to cool? Here's the quote. This is great, guys. We would need 5 years of unemployment above 5% to contain inflation. In other words, we need 2 years of 7.5% unemployment, or 5 years of 6% unemployment, or 1 year of more than 10% unemployment to bring down these inflation numbers. The inflation number today is 3.6%. So what Summers is saying is before we're going to start seeing some relief in this inflation, we're going to need to see unemployment at 7.5% for 2 years, or inflation or unemployment at 10% for a year. I don't think this sounds like a good thing for our economy and the stock market, guys. He further went on to say that his numbers were remarkably discouraging, especially when compared with St. Jerome of the Fed, whose rosy predictions always are telling us that they can eliminate this inflation and keep unemployment at or below 4%. More comedy gold, guys. This is nuts. We got a really, really interesting end of this month coming up. A lot of the stuff that's why I think the markets were flat, because everybody's kind of scratching their head saying, okay, this can go two ways. Which way do we think it's going to go? We're going to have a lot to talk about over the rest of this month, so make sure to tune in and get the information to keep you up to date on what's happening. So now what we're saying is we know we're in a recession. We know when there's a recession with inflation, the average length of time is 20 months. The average decline in the stock market is 40%, meaning we're probably 6 months into a recession that's going to last about 2 years. So we got about another 12 to 18 months of recession to go. The stock market, the S&P 500 is down less than 20% now, so we got another 20% plus to go if you go by these averages. We know that unemployment, according to what Larry Summers is saying, is going to have to get up to 7.5% or 10% to bring this inflation down. So these are remarkably terrible things coming up for all of us in the near future. I've been telling you guys, hunker down. I've been telling you to start putting money away, start living within your means. It's more important now than it ever was, guys. Please hear me when I'm saying this stuff. This information is not, this is numbers. This is stuff that there's no denying what's happening. So please, guys, get yourself in the right position here to survive this. It's going to get ugly. Before we sign off today, one quick thing we're adding on. We went ahead and got an email address, AskChuckBarone@gmail.com. Again, it's AskChuckBarone@gmail.com. You guys have been doing an amazing job every day asking me questions in the comment section. I've been doing my best to get to those questions every day. If you have something that's a little more in depth, that might be something that's tough or difficult to answer in the comment section without writing a long novel, send me an email. Let me know how I can help you get yourself in a better position if you don't feel like you are, or get your portfolio in order, or anything to do with finance. And I'll do whatever I can to pass along my experience and help you get yourself in the right position to survive and succeed the big storm coming up. Anyway, that's it for this week, guys. We really appreciate your support for the videos and the channel. Please like the video if you like what you're hearing and you think the information is useful. As always, please comment. Please ask questions in the comment section. Don't forget to make sure you get the notifications turned on and ring the bell in your subscription part so you get notified every time we have a new video coming out. Share this video with your friends and your subscribers. And if you haven't already, subscribe to the station. Guys, have a great weekend. Let's turn our brains off for a few minutes and get away from this market. Enjoy some time with your friends and your family and the people that are important to you. Have a great weekend, and we'll see you again on Monday. Thanks.